Hi, this is Susan Sharpe. I'm with Exit Realty Anchor South in Fort Walton Beach, Florida, and I serve the Gulf Coast of Florida from Pensacola to Panama City and all the way up to the Alabama state line. With me is Andy Gagliano with Gagliano Mortgage, and he services the Alabama and Florida markets. One of the things that I wanted to talk about and is very important that most people, well, that everyone who wants to buy a home understands, are the items that are in the contract and things to consider when you're wanting to put an offer in on a house. Of course, the main thing that most sellers are interested in when they receive an offer on their house is the purchase price. So the purchase price of the home should be determined with a conversation with your real estate agent to see how the list price of the home compares to the other homes in the market today. Your purchase price does not have to be the list price, although for a period of time offers were at the purchase price or the list price or above. Currently, they're not at that point. And when I'm talking about the purchase price of the home, it's how much you are initially wanting to offer on that home. And typically, I advise clients to go a little bit below what they're comfortable landing at. So you may be comfortable paying $350,000 for a home, but that seller expects to negotiate that price. So you may want to consider offering $340,000 for that home. So that gives you a little bit of wiggle room. The purchase price, when I'm thinking about it, I am looking at it in terms of the whole dollar amount because we have to think about what you're going to be able to qualify for a mortgage. But I'm also looking at it on a price per square foot basis so that we can compare on a more sure criteria how it will how it compares to the homes that are sold in the area, how an appraiser will look at it, and whether you'll actually be able to get financing for that home. If most homes in the area are selling at a price point of $250 per square foot, we don't want to make an offer or purchase a home that's at $275 per square foot unless there are some outstanding aspects about that home that will allow it to appraise for that. The next thing that a seller is going to consider is your earnest money deposit. And basically, an earnest money deposit shows the seller how sincere you are about purchasing the home. The seller is looking to sell the home, and they're going to be effectively taking it off the market when they accept your offer, and they want to know that you are serious about doing everything that needs to be done to get the sale completed. Typically, your earnest money deposit is around 1% to 2%, which means on a $100,000 home, you would be depositing 1% to 2% with the title company. Now, the title company will take that money, they will cash that check, and it will leave your account. So be prepared with the earnest money deposit to actually have that money removed from your account and sitting with the title company until the time of closing. The best part of that, though, is the title company will hold that money until closing, and then they'll apply it to any closing costs that you have. So as a part of the process, you've got loan fees, you've got inspection fees, you've got a variety of fees that go along with it. And that earnest money deposit isn't just lost to you. When all of the figures are put in a spreadsheet, that earnest money deposit will be applied to your expenses and reduce what you have to bring to the closing table when the time comes. So there are ways that the earnest money deposit can be lost, but we're going to talk about that in a future video. Just know for now that it is something that the seller is looking for. They're looking to see that you're serious about purchasing the home. And typically that is money that goes back to you in the closing process. The next item to consider are contingencies. And contingencies are those things that could keep you from purchasing the home. And that does kind of relate to your earnest money deposit, because if you do not meet these contingencies and do not notify the seller within a timely period, then that could be a situation where you do not get to get your earnest money deposit back. And typically our contingencies are for inspections and they're for financing. Now, for inspections, the state of Florida, the contract, the default time period is 15 days. In hotter markets, we can reduce that to 7 to 10 days. because during that period, you're going to be evaluating the home. You're going to be deciding whether that is a purchase that you actually want to follow through with. And for a seller, that's kind of an uncomfortable time period. They know that things could come up, though they shouldn't if they've prepared their home properly, but things could come up that could cause you to cancel the contract. So in a hot market, the shorter that inspection period, the more likely that the seller is going to be comfortable with your offer. However, don't make your offer and your contingency for an inspection based solely on the seller's comfort, because you also have to have time to get the inspections done and report to the seller the things that you found. And if it's not an as-is purchase, the seller needs to have time to get quotes for repairs. So that's your inspection contingency. The other is the financing contingency. And that means that you have a certain amount of time in order to get your financing approved. And typically that's 30 days. That can be adjusted. You can put 45 days if that's something that you feel is necessary, but most of the time you can get your financing approved within 30 days. And in that time period, you're going to hopefully have already applied, but if not, you have 5 days to get the application in for your mortgage. And then the remainder of the time to make sure that you have all of your documentation and are responding to your lender in a timely manner to make sure that they can get their process worked through and done within that 30-day time period. My advice is to talk to your lender early on about when they order the appraisal, because oftentimes it is the appraisal that can hold up getting your financing approved. Make sure that you're communicating with your lender. Make sure your lender is communicating with you. That financing period can be extended if necessary, but if you do not have your financing approved and you don't have an extension, again, that's a situation where you can lose that earnest money deposit. Another consideration that most sellers are interested in is your closing date. You'll indicate on the contract the date by which you think that you can close on the home. And choosing a closing date is based on a variety of variables. Are you using cash to purchase the home? Are you financing the home? By when do you need to be there? What your timeline is. You also want to take into consideration what the seller's timeline may be, because this is a negotiable item. And in our market, we have a lot of military people that are PCSing. They are experiencing a permanent change in station. So that closing date can be very important to them based on when they have to move, based on what the military tells them. So that is something that has to be put in the contract, and it's a date by which we believe that we can have every process undertaken and completed in order to affect the sale of the purchase of the property. Sorry. Another very important thing to consider are what's to be included with the sale. Are there things that are in the home that you would like to keep? The washer and dryer come to mind. Oftentimes, people want to make sure that they get all of the appliances, and most of those items are already written into the contract, but there might be something like patio furniture or a riding lawnmower or different items that you see and desire to have stay with the home. And on the other hand, there are items that the seller may want to exclude from that sale. So again, riding lawnmower, washer and dryer, different items that they want to make sure that they can take with them. And typically, if it's not attached to the house, the seller can take the items with them unless you specifically ask for them to be included. Now, and the reverse is true as well. Typically, if something is attached to the house, included mounted televisions, curtain rods, just anything that is considered to have become a part of the property, those items are expected to stay with the house. So what do you want included and what does the seller want excluded? And what do you want excluded? Is there a jungle gym in the backyard that you don't want and you want the seller to remove? So that's another consideration when you're writing up an offer, something that can be negotiated and certainly something that needs to be defined before you go under contract. Another relating to your purchase price, your earnest money deposit and contingencies are the financing terms. In a contract, when you're writing an offer on a home, you indicate whether you're going to be financing the property or using cash. And when you're financing the property, what type of loan are you using? That is important to the seller to know, because there are different requirements under different loan types that the seller will have to comply with. There's different addendums that have to be used if you're using an FHA or a VA loan. So, the seller is going to want to know that, although it should really not affect whether they choose your offer or not. It's just important to be upfront with what your intentions are when it comes to financing the property. You don't want to get your offer accepted saying that you're paying cash and then turn around and decide to use an FHA loan, which may have stringent requirements that the seller wasn't anticipating when he accepted the offer. Another item, which we've talked about under contingencies, is the inspection period. You're going to indicate to the seller how long you think you need for an inspection, whether it is the 15 days, or whether you think you can get it done in 7 to 10 days, but how long you think that you're going to need. And your real estate agent should be able to advise you on this, because they are daily working with inspectors and know the timeline by which they can get things done. Oftentimes, a real estate agent will have an inspector that they work with on a regular basis who will get in a time period for them, because they know that they have a good working relationship. So that indicating that inspection period, as I mentioned before, is important to the seller, because up until that inspection period is done and you are happy with the condition of the home, it's up in the air as to whether the property will actually be sold or not. Andy, am I going too fast? Anything you want to add?
No, I'm soaking all of this in. I think this is wonderful information. And, the one thing that I want to ask you is, I get asked the question a lot of how is the market, meaning how's the real estate market? And if I have the time, I try to explain to the person who asked that question that we don't have a real estate market anymore. We have several micro markets. And so how important is it to know, for a buyer to know that the house that they've fallen in love with, that they want to make an offer on, what the micro market is in that area, to be able to know what they can possibly ask for to give themselves the best chance of their offer to be considered? I mean, is that?
That's extremely important, because, as you know, where I am, we have multiple micro markets because of the beach area. We've got the vacation rentals. We've got the millions of dollar homes in the 30A area. We've got where I am, where they're older, smaller homes. So knowing what the expectations are with the different styles and locations of the home, and how the properties in the surrounding areas are doing, and what the sellers and the buyers are having to compromise and negotiate on, is very important. And it can be, excuse me, I'm where I sit is 7 miles from Destin, completely different market. So working with someone who is aware of what's going on in the different types of markets, it's very important. Can make a big difference on every aspect of your offer.
Yeah, I could see that being a bit of a challenge for the market that you're in, given that you have people from all over the country who want to purchase real estate along the coast somewhere, whether it's on the bay or it's actually on the Gulf Coast there.
Right.
So I could see where a buyer may say to you, well, we just purchased our home last year and here's what we did. Well, the home they purchased was in Lexington, Kentucky. And it's a vastly different market than what you're in. And so, being able to work with a professional who knows what those micro markets, as I'm calling them, are like, and be able to guide that buyer is got to be just extremely key.
It really is. And having that conversation with your real estate agent is very important because, again, someone may be coming from Houston, Texas, and this is how real estate's done there. But in Florida, not only are our contracts different, but just the way things are done, or the experience in the market can just be drastically different. And then you also have folks that are coming from, say, California. There's a lot of these things that they don't really even care about. They've got the money to do what they want to do. They just want to buy in an area that's less expensive than what they're coming from. So, a lot of these variables are going to be different based not only on the market, but the buyer and the seller and the type of property. It's mind-boggling how many variables there actually are when it comes to making an offer on a property. And that's why you need to work with a qualified agent.
Yeah. And I see it a good bit too, just on the mortgage side, in talking about closing costs. And, to give you an example, in Birmingham, Alabama, it is written in standard, typed into the contract as a standard clause in every real estate contract that's been prepared by the Birmingham Association of Realtors, that the seller and the purchaser equally split the cost of the title insurance and the closing attorney's fees. But that's not the case anywhere else in the state of Alabama. It's not the case in most of Florida either.
Right.
And so, it's just extremely important for a buyer to go through and read that contract, but also to have the guidance in someone that they trust that can get them pointed in the right direction and, give them some good advice about what to do.
It's interesting that you say that, because that was going to be the next item on my list, would be closing costs. A lot of people don't know this, but closing costs can be negotiated. You mentioned, for instance, the title insurance and the title company fees. That is a commonly negotiated item in the contract. You'll indicate who's going to choose the title agency and who's going to pay for the title insurance cost and the cost of the title company's processes. So, that is very commonly negotiated. There's not a set way that we do it in this area. It just depends, on who's willing to accept that. And in addition to that, a lot of people don't realize that they can ask the seller to contribute to their closing costs. And we see that here a lot with our military personnel, because typically they're getting a VA loan, which is 0% down, and they really don't have a lot of money in the bank to pay for their own closing costs. So then we'll ask the seller to contribute a certain percent towards their closing costs. And then that helps them get into a home, sometimes getting some of their earnest money back. I haven't seen that a lot lately, given the market having been the way it's been the past couple of years. But when I first started in 2015, my second buyer got his entire earnest money deposit back because we had negotiated for the seller to pay for all of his closing costs. So again, it's something to take into consideration when you're writing that offer. Can you afford your own closing costs? And if you can, what other parts of the contract can you then make more favorable for you, because you're not asking the seller for that? My conversation quite regularly with people is, if you need to ask for $10,000 in closing costs, you might want to up your offer price. You're effectively financing your closing cost, but if that keeps you from having to bring that much money out of pocket to the closing table, and that allows you to purchase a home, it might be a good strategy for you when you're buying a home.
So true. Yeah. And I would add on to that, this is a situation that really stresses the importance of having a loan officer who can communicate well with your real estate agent and who can, because just what Susan said, if you have just enough money for down payment and you can't pay closing cost, but you can still get qualified for a mortgage, if the seller pays those closing costs for you, it's crucial that your real estate agent knows that when you make that first offer, because going back to renegotiate is never a good thing. If you can avoid having to renegotiate, please do that. And
Yeah.
So having that open line of communication between your real estate agent and your mortgage loan officer and yourself is crucial, especially at
Mhm.
that early stage of writing an offer.
Absolutely. And I would add to that, I work with a lot of different people. I don't judge what someone has and doesn't have when they're getting ready to purchase a home. But please don't
Certainly.
tell me that you have something when you don't. Because when I talk to a buyer and they're like, oh, yeah, no, I can afford all the closing costs. And then we start getting in, we get the house under contract and start going through the process and realize that that's not actually true. Then it can be a battle in some instances to make sure that they get their earnest money returned to them if we've blown through some of the contingencies. So, being honest and forthcoming with information on the front end is crucial to making sure that the process goes through smoothly and to the best benefit of both the buyer and the seller.
Yeah. And that's where that trust comes in, and working with your realtor and working with your mortgage loan officer, and if a buyer looks at it this way, at some point in time, your mortgage loan officer is going to find out that
Yeah,
if you don't have $100,000 in cash in the bank that you're going to use for your down payment, we're going to find that out.
right.
Let
Mhm.
us know up front. There's never any judgment. I've done loans for people who
Right.
literally spent every last penny they had in their checking account to buy that home, to close on that home. And my only judgment given in that case was congratulations,
Yeah,
because they made the best investment with that money they had in their account that they could
right.
ever make. And I was so excited and so proud of them that
Hmm.
they saved that last penny that they needed to get to that
Right.
point. And it's far less embarrassing to disclose what you
Right.
may not have up front
Hmm.
than it is to get into a contract. All of your friends, all of your family, all of your coworkers find out that you're buying this home, and then all of a
Right.
sudden you can't close on it. And it's
Hmm.
just, that is never a good situation
No.
for you to be in as a buyer, for Susan to be in as a realtor, or me to
Right.
be in as a mortgage loan officer. And so
Hmm.
we do have to have that open line of communication, and know that when you hire Susan as your realtor, when you hire me as your loan officer, we're on your team.
Yeah.
We want you to accomplish this goal that you set out to close, and we're going to
Hmm.
work darn hard to make sure that that happens. And so,
Absolutely.
yeah, I'm glad you brought that up.
Yeah. And if that means asking the seller to help with your closing costs, then that's what we'll do.
Yeah.
Another item that we're going to consider when we're writing up the contract is a home warranty. Um, the contracts in the state of Florida have a section where we indicate whether we're asking for a home warranty or whether we're purchasing a home warranty and who's going to pay for that home warranty. Either the buyer or the seller can pay for the home warranty, but the title company needs to know that one's being purchased so that they can make sure that that is taken care of as a part of the closing process. Um, if you're buying a brand new home, typically the brand new home comes with a builder warranty. If you're buying a 15-year-old home, chances are the HVAC system, the hot water heater, the appliances, and all of those things are 15 years old. So in that instance, you may want to ask the seller to provide you with a home warranty, or you may want to consider purchasing one on your own. They don't cover everything. And oftentimes, in the case of an appliance, they're going to definitely try to repair that appliance rather than replace the appliance. But it can certainly save people a lot of money if they have that home warranty in place. And asking for that on the front end as a point of negotiation when you're aware of what the age of some of the appliances and the systems in the home are, that can be critical for someone down the road.
Yeah. I, I like that you brought that up, especially for, a first time buyer who may be using that last penny that they saved,
Right.
have it asking the seller to pay for a home warranty, because I mean, my phone has rang more than once with somebody, that a buyer that I closed a loan for a week or a month earlier, and they say something along the lines of, well, my dishwasher went out, or
Yeah.
my HVAC went out.
Right.
and they're looking for money at that point in time, ways to get
Exactly.
money to be able to pay for those
Mhm.
repairs, whereas a
Mhm.
home warranty would very likely take care of
Right.
those things.
I've actually, I've bought and sold about 10 houses, but in two of them, the HVAC went out within a month of buying the
It's,
home, once in the winter and once in the summer, and in the summer in Florida. And thankfully, we had a home warranty because we were able to get those repaired and repaired rather quickly. So,
yeah,
there's definitely, you may think it's insurance, and insurance is something that, you just spend money on and never use. But a home warranty is something that if you need it, it's important to have it there.
yeah.
Yeah,
And, it's just strange how your HVAC knows
I know,
that the
right?
house has just changed hands. It's like, oh,
I
the
know.
old owners are not here. I'm going to quit.
Yep, exactly. Exactly. It's like they felt bad because they got left behind. So I'm done.
That's
But
right. That's
yeah.
right. Yeah.
Finally, make sure that you're aware of the terms in the contract that pertain to default and what remedies you have should something go wrong with the contract. In the state of Florida, we agree to mediation should something go awry, but know what it means to default on the contract and realize that this is a legal contract. This is a legally binding contract. You've signed it, the sellers have signed it. There's been consideration, which makes it a legally binding contract. So you need to know and be prepared for what situations constitute default, not because you want to, but because you don't want to, and you want to make sure that you don't run into or cause any of those items to occur that would result in defaulting on the contract. And then if the other party does default on the contract, what are your remedies? What can you do to either be reimbursed for the expenses that you've incurred, make sure you get your earnest money deposit back, or affect a sale, which can be done even if the seller decides that they want to back out. It's rare, it's hard to affect a sale. Um, Typically, it's more about getting your money back, getting reimbursed for the expenses that you've had if a seller has changed their mind. But knowing what those options are for you and what situations you might be faced with, even though they're extremely rare, you always need to know what your rights and responsibilities are under a contract of any kind.
So true. Great point. Yeah. Multiple times I've gotten that phone call of, Andy, we are past our inspection point. We're at this stage of the
Mhm.
process, and the seller's not been extremely honest or
Yeah.
forthright about things, and we want to back out of the deal,
Mhm.
and it, a buyer has to know what are the ramifications if they back out.
Yeah,
So
exactly.
it's good
Yeah,
to
but
know all those
particularly if
things.
they're past their contingency dates.
Yeah.
It's definitely a challenge to justify backing out and getting your earnest money deposit back in those situations.
Yeah. Very good. I mean, these are just phenomenal reasons to hire a realtor. I mean, there
Right.
is
I mean, I'm going
so
over the basic
much.
contract information, not to mention there's about, I don't know, 15 addendums that could be used with any given contract that your real estate agent is aware of and can help you work through if they apply to your situation.
Yeah, there's so much to a real estate transaction. I just cannot
Mhm.
imagine trying to navigate that transaction without the assistance of a professional like
Yeah.
Susan to help out. So,
Yeah.
yeah,
Yeah.
Susan, if somebody wants to hire you, wants to have a conversation with you about real estate, how can they go about doing that?
Well, I can be reached by phone at 850-974-4890 or email at susansharprealtor@gmail.com. And there is an E at the end of Sharpe, but you can also text Sharpe Homes FL, that's SHARPE Homes FL to 85377, and that will give you my mobile business card. So any of those free routes
Awesome.
would work.
That's great. Yeah. And if I can help anyone with the financing side, just to have that initial conversation to determine how much you can get approved for according to guidelines, I'm happy to do that or answer any questions that you may have about qualifying for a loan. I can be reached at 205-979-4412, and I'm at extension 1. So Susan, thank you. This has been awesome. There's a lot of really good information in here.
Great,
Thank you
great.
for
I'm
it.
glad. Thanks
All right.
thanks for doing this with me, Andy. I appreciate it.
Glad to do it. Look forward to seeing you next week.
Yes, sir. Bye-bye.
All right. Goodbye.